Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
But I think the market may win anyway.
That's a great point, Jack. Just want to remind everyone that just what Jack was talking about, the currency currents, you can get that every morning. Jack talks about this in his morning commentary. I mean, not every day, maybe not even every week, but, these kind of concepts are something that Jack and his son handle on a daily basis. So please sign up for the currency currents. It's free. And then he has some paid services that you might want to sign up for also in the future. But go to Black Swan Trading. What is it, Jack? Black Swan Trading. Info at Black Swan Trading. Yep. And you can sign up for this. And again, the currency currents is free, so I would highly recommend it. Jack, any other questions?
One more is stock market rise justified in terms of U.S. dollar decline? Steve, that's something we talk about. You want to take that one?
Yeah, the question is, what is the stock market overvalued?
Yeah, and it says, is the stock market rise justified in terms of the U.S. dollar decline? And I know this is something, that you and I both agree on.
Yeah,
to a degree.
What's interesting is that, that where the market was much higher, we saw the dollar being so much higher, and now the market is so much lower, and everything is in context to something or relative to something, but when you look at the dollar against the yen, the relationship's pretty similar now, that even though the dollar has come off quite a bit, well, the market's down quite a bit, but as Jack and I were talking offline just prior to the presentation, and Jack actually alluded to it in some of these slides, is that the Japanese exporting to the U.S. has really not worsened all that much if you were to look at a longer period of time. So it's interesting that even though the yen has strengthened dramatically, the U.S. relationship relative to Japan has not really improved, and that's not what a lot of the economists would have predicted, although, Jack, I guess you're sort of on the other side of that one, right, Jack? And also David Malpass also, right? Both of you would be saying that, just because the currency comes down doesn't necessarily mean that your economy is going to improve. But, the markets where they are now, we're seeing some very strange situations that the market is actually, as Jack pointed out, the market is actually might be even ahead of the currency. So if the market is up, the currency market takes a clue and people sell dollars. But, when the market's down, they tend to sort of do the reverse and buy dollars. We'll see how it all plays out. It depends on how much growth we have in the future. If you look at some of the other markets in the world, they're up a tremendous amount. The Brazilian market, Jack, what is that up? I mean, in U.S. terms, or in Brazilian terms for a U.S. investor, it's got to be up, nearly 100%. At least I saw an article on that, which is astronomical.
Yeah, absolutely. Yeah, and I would just add that, the weaker dollar policy that we're in now goes hand in hand with pumping out a massive amount of liquidity. And given the amount of investment, real investment growth choices around the world in terms of the real economy, they tend not to be there. So when you have that much liquidity and you're stretching for yield because your particular income rates are so low, you tend to see people move that money. That liquidity has to go somewhere, and it's tending to go into the stock market, as a return option, because they're, the other choices that just aren't there. So it is part and parcel at the moment. And one of the reasons that the U.S. government thinks that this weak dollar policy is working is this just run up in stock markets tends to create what's called the wealth effect, or at least they think, and it does to a degree, which means it gives the U.S. consumer a little more confidence when he sees his 401k statements going up. So it is, part of this same implicit policy, but you have to think that this run-up in financial assets, until we see some type of support in the global economy that's real growth-based as opposed to just, dollar credit-based, you have to be concerned, or at least we are.
Jack, let me just ask you a question. Is it that dissimilar to an equity where a company buys back their stock at a very, very high price because they want to reduce the number of shares outstanding, but if their business doesn't get any better in the future, that was actually a bad investment? And do you think that analogy can be used here in the U.S. where our balance sheet isn't that strong and we're doing things to pump up our assets with not great fundamentals?
Yeah, I think that's a good analogy. I mean, you're throwing money to play more of a financial game as to create real wealth, and that seems and that's sometimes what you see there. I mean, sometimes companies actually think their stock is very undervalued relative to what they think the real underlying assets are, but often it's just a financial game, and that seems to be it's almost a bet too. It's not just pure financial gamesmanship by the U.S. policy. They actually are hoping that the flow-on effects will happen. Confidence will improve. The credit markets were healed. We finally start seeing some lending to the private sector, but the reality is it's not happening. The lending isn't getting to the private sector because of the way they've chosen to distribute all this taxpayer money. It's very sad to see trillions and trillions of taxpayer dollars going in and not making it back to them in the real economy to support their own jobs or their small businesses. Is very, very depressing, and I think the American people are catching on to that, and the globe and other investors around the world see that, and I think it's just another negative sentiment piled on top of the U.S. dollar.
Yeah, I mean, you don't want to see things that are destabilizing, but if you look at, as you pointed out, Jack, that we're financing bubbles around the world, whether it's in Brazil or in Australia or New Zealand, those markets are up a tremendous amount. And we as investors are encouraged to sort of partake in those markets, because if you're lucky enough or smart enough to get in those markets today and the dollar is devalued in the next couple of months and those markets go up, you get sort of that leverage effect and you make a lot more money. But leverage is a double-edged sword, and if the markets ever start to decline, well, then you might have a double loss. If the currency, the dollar, might actually be rallying, and you might have an investment in an emerging market. Not that I should say that Australia is an emerging market, but a market that's growing much faster than the U.S. So it's all about perception, more risk, more reward. But you got to remember the risk, Jack, right?
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.